Rent versus buy. The age-old question, what should someone with a lot of student loan debt do and why? What are the pros and cons of rent versus buying when you have a jumbo size student loan debt balance? I'm Megan with Student Loan Planner, Senior Student Loan Consultant, and I'm here to break down what the pros and cons of renting and buying look like when it comes to having large student loan debt in the mix as well. Let's jump in. Mooney. Hi, babies. Let's talk about the pros and cons of renting first. So I would say first and foremost for renting is the flexibility. You are not committed to stay there well, you're committed, but for a shorter amount of time. Renting does allow you to move easier for other job opportunities, which if you're earlier on in your career could be really important to keep in mind because maybe you're not going to be where you're at right now. You're looking for some lateral career movement. Next is there's a lot lower startup costs, I guess you could say, or upfront costs when it comes to renting. Usually it's like last month's dues or first and last month's dues, something like that. Maybe a deposit when you get started with a rental agreement. But we don't have a down payment. We don't have closing costs or inspection fees that we have to pay for. So it's relatively low cost to get into a rental earlier. Another positive with renting is predictable costs. Man. Predictable costs is not what you're going to find with home ownership, right? Rent, you just have to worry about paying your rent and paying your renter's insurance, ideally, and your water bill, your electric, those utilities that you're always going to have. But you know what to expect cost-wise. And you know generally that there might be a price increase in the future on your rent payment. We'll talk about that in a little bit. But home ownership is totally different. You could have things that you have to fix. When you're renting, anything breaks down or is worn down in your apartment, you have a landlord that comes in and fixes it for you.
Definitely fixes stuff really well.
Predictable expenses make budgeting easier, I would say. And with student loan payments, that can be really helpful, especially if you're earlier on in your repayment journey. Let's talk about cons of renting, though. One is that we don't have equity within a rental agreement, right? We're not building something or growing an asset over time. Rent payments don't contribute to you owning that property. And like I mentioned before, there could be rent increases. Those could be inevitable with cost of living over time, but your landlords could raise rent outside of your contract, making it hard to actually stay there more long term if it keeps going up compared to maybe the market around you. Lifestyle-wise, there's limited customization that you could do with renting. You can't make major changes within your apartment. You can't knock down walls or put up new, permanent decor. That's something that the landlord would have to approve or do themselves. Another con might be considered missed tax benefits or tax opportunities. Homeownership can offer tax deductions like your mortgage interest that renters are just not going to get. Another con is potential for eviction or just instability, meaning your landlord could decide, hey, I want to sell this property. You've got to get out. And then you're homeless, right? You've got to go find something else in the near future. So there's not a lot of control over being able to stay there long term, even if you could afford those rent increases over time. So the bottom line, I think, with renting when it comes to having a large student loan debt balance is renting can provide you with some stability when it comes to just having more fixed costs when we're paying for housing. It's going to allow you to really focus on the debt to either pay that debt off as soon as possible, reduce that interest cost over time, or be able to focus on other financial goals that you have if you're working towards a forgiveness path, for example. However, if you are in a very stable position, job-wise, income-wise, financially, and you plan on staying in the location that you're in long-term, then home ownership could be something to consider. So let's talk about the pros and cons to home ownership. Starting with the pros. Building equity is the first pro, right? Instead of paying rent, you are paying down a mortgage that's growing your net worth. We're paying down a debt on something that we own, and it's an asset that you can sell in the future, and it's something that can appreciate over time. So you have equity within an appreciating asset. Another pro is we have stable housing costs for the most part when it comes to the principal and interest that you're paying towards your mortgage. With a fixed rate mortgage, you have monthly payments that you pay, and that's what the monthly payment is for the 30-year term or the 10-year term or 20-year term, whatever you're committed to. There are tax benefits to homeownership where you can deduct the mortgage interest that you're paying if it makes sense in the property taxes that you're paying over the course of the year. I would say there's probably more stability when it comes to homeownership because you are more permanently in a location. You have longer term security. That is where you live. Someone can't come in and make you move. And maybe a little bonus on a pro for homeownership is there could be potential rental income. If you have extra space or a side guest house, you could be renting that out and receiving some residual income on the side. But of course, with all things good, there are cons. So let's talk about cons of buying a home when you have student loan debt. One big con is there are large upfront costs, right? We have closing costs, we have inspection fees, we have a down payment that is a lot of times required unless you're looking at things like a doctor mortgage. These things added up make purchasing a home, like the entry into purchasing a home, more difficult, especially if you have student loans, because your cash flow is going towards maybe rent until you're able to buy and going to towards your student loan payments and your other bills. There may not be a lot of extra cash flow to be able to save and build up a cash reserve for these upfront costs that are necessary for home purchasing. Sticking with the financial theme here, there is an increased responsibility, financial responsibility here that needs to be addressed, right? We are responsible for any repairs or maintenance of the home. So if your air unit goes out or it needs repair, you are going to need to pay for the repairman or for the parts or the things that need to make it run again.
I don't know how to fix my problems.
We have to pay property taxes, which you don't have to do when you're renting. We have to pay insurance, which, yes, we have renter's insurance when we're renting properties, but homeowner's insurance is a bigger, more robust policy, more expensive at the end of the day. And these monthly costs can be unpredictable if we're talking about repairs and maintenance costs, and they can be expensive. And so a higher cash reserve is certainly, I would say, required when it comes to owning a home. When maybe renting, we don't have to have that big of an emergency fund because there's not many large expenses that could be thrown our way. Another con might be just the fact that it's slightly harder to get approved for a loan than it is to go and rent a property. When you're looking at purchasing a home and needing to get a loan for the home for the mortgage, you are going to go through an underwriting process that's pretty strenuous, and they are looking at your debt to income ratio. That means they're looking at how much of your income per month is going towards other debts that you have in the picture. So your car payment, your credit cards, your student loan payment. And if we have a large student loan balance, if we also have a large student loan payment, that's going to make our debt to income ratio monthly not look so hot, right? There are solutions for that, like income driven repayment plans could be a good option, especially if we're going towards loan forgiveness. We would need to be on an income driven repayment plan, which keeps the payment proportionate to your income. So that makes the debt to income ratio a little more reasonable there. But that is a factor that comes into getting approved in the first place for the loan. A con to owning a home is also just less flexibility. You can't just up and leave. You've got to go through the process of selling your home or finding a renter if you're wanting to keep the home, but you need someone to cover the mortgage while you're gone, right? So selling a home can be timely or time intensive, I should say, and can be costly because you still have realtor fees that you're going to have to pay. You might have to pay for some maintenance costs before you sell the property. You may have to pay for staging or for just what it takes to get the property sold, you know? So there's less flexibility, which come with maybe some additional costs if you're trying to get out.
It's more responsibility than I thought.
Another con, which also could be a pro, it depends on what's happening, right? But is market risk. Home values can fluctuate. So if you want to sell 7 years from now, but the market is not great for sellers, that's something that has to come into play financially when we're thinking about, do we actually want to sell in a downturned market? The flip side could be true, though. It could be a great market when you're looking to sell, and that means there's lots of people willing to pay maybe above asking for your home. So there's a chance, though, that you could lose money if you're trying to sell during a downturn, or if you're trying to sell too early after purchasing. You might be upside down on the property, and that might mean you're coming out of pocket to get out of a home. And maybe the last con I'll mention here is just the opportunity cost. Money is tied up in a home. It is an asset, but it's not something that generates income for you unless you're renting out some extra space, right? You can't live off of your home equity. You can't use that as a bank unless you have a HELOC. That's a whole other conversation. But generally, we do have more money tied up in a asset that is not liquid that could be used towards paying student loans off faster or investing elsewhere. So the short and skinny of it is buying a home can be a smart financial move if you have stable income and you plan on staying in that location for a long period of time, and you're able to comfortably manage the student loan payments alongside the expenses that come with purchasing a home. But if you're already feeling like finances are pretty tight, or you anticipate that you need more flexibility in your lifestyle, your living situation, renting may be a better choice than purchasing a home right now. There's a number of things that you want to ask yourself when you're comparing renting versus buying, and they go along with those pros and cons that we talked about. So ask yourself about the flexibility. Is that really important to you? Are you going to be in this location for a long period of time? Do you feel really secure with your job? Do you feel very secure with your income and your current savings rate, your current budget? What are your other short-term and long-term financial goals that you're working towards? And does renting versus buying, or vice versa, align with those goals?
What do you want?
Is there a partner in the equation that you want to have all these conversations with as well to make sure y'all are on the same page? Renting or buying is going to be a very personal decision, so you want to make the right decision for you. Don't feel like you have to keep up with your neighbor or the Joneses here. Do what's best for you. Some folks may be eternally happy renting or living a more nomadic lifestyle, where others really want to hunker down and settle, and that's perfectly fine for them. But don't feel like you have to fit into one cookie cutter mold, or feel like you need to be doing something because everyone else around you is.
Stop copying me!
You can make the best decision for your situation by talking through the pros and cons, running the numbers to see what that might look like when it comes to a mortgage payment in your cash flow versus a rent payment, and really laying it all out there to make the best decision for you specifically. Check out our other videos on homeownership and what types of loans maybe to consider when you're purchasing a home. Leave a message in the comments. Are you going to be renting or buying this year? Hit the like button if you like this type of content, and make sure to subscribe if you like to hear about student loan related things along with financial planning things. And of course, if you need one-on-one support with your financial plan, check us out at studentloanplanner.com. We've got you. We can help you get on the right track with your student loan situation so you can focus on these fun things like purchasing a home or renting. And I'll catch you on the next one.